So KG and I are bringing in a guest today. So we have Sam from All Star Charts. So Sam came on the other week with me. We had a lot of fun, a good conversation about commodity super cycle, basically, and kind of talking through all the different charts that he's looking at. Sam has a bunch of good charts out here for you guys today as well. But KG's on as well. So, just going through the random reports. Let's see what the markets are looking like. I always have that up on my screen before I go live, but today I just forgot. Sorry about that. Give me a second. So in the last month, coffee leading the way. Coffee's having a huge day today. I'm pretty happy about that. There's been a lot of chop lately, but coffee bringing us to a new equity high today, basically, which is cool. Sugar, that's 8% for the 1 month performance. Sugar rate behind that at almost 7%. Ethanol behind that at 6%. Crude oil at 5%. Crude oil is really trying to carve out a bottom here. We talked about it the other week. Basically, that false breakdown signal I like so much, and I talk about probably too much, which is we broke those levels down under 76. We then reversed higher, got right back above that level, closed there, and then we've been trending up ever since. So far, so good. Let's see where that ends up. If you guys are in the Against All Odds group, you guys can check the chat and see those trades in real time. So we hit, basically, there was a short-term trade to $80. My systems are trend following systems, so they're going to be a lot longer than that. So I'm continuing to hold that trade. See where we end up, but we're at 81.32 today. Going back to the 1 month performance. Then we have cocoa. Cocoa, man, that's been a bucking bronco lately. Have you been paying attention to the cocoa moves, Kevin?
I haven't so much lately here, but as you kind of talked about, I think we talked about it last week, right? I mean, there seems to be some green shoots that are kind of showing back up in the cocoa market here. But I haven't gotten anything outside of kind of what we talked about last week, right? Like the Ivory Coast kind of taking some pretty significant action against those that are producing. They're not also allowing 2024, 2025 forward contracts yet. They kind of halted on that. So that kind of creates this build up in anticipation, right? This kind of like backwardation type of feeling that could actually happen in that market. That's kind of another reason to the upside move. But outside of that, I haven't seen anything else that like really just shows that full follow through. We might just be seeing that second win taking place right now.
Well, here's the other interesting part. So we were kind of seeing that, and Kevin and I talked about commodities a bunch, and what we've mentioned is when we have these huge blow off tops where a commodity just rages higher, most of the time, once it makes its final high and breaks trend, it usually doesn't take out that high. It's very rare. It does happen, but it's rare. And so we haven't been long it again, and we don't have any signals to get long it at this point either. But we saw it. It was having 8% up days, 5% down days over and over again. Today, it's down 13% just in one day. So this is kind of why we're talking about the commodities are a very different type of market where you have to really understand the volatility of these products, how they move, and as equities kind of V bottom, commodities tend to V top. So this is where you get these nasty pullbacks and what it's carving out right now. And this is a pattern that I love the name of this pattern because very few people even ever talk about this pattern, but it's called a fallen angel pattern. And what happens is you get that big blow off top in a commodity. Think of Bitcoin 2017 when it topped out through 2018. Basically, it keeps going up. It comes back down. It keeps going up. It comes back down. So lower highs, lower highs, lower highs. They call that a fallen angel pattern. That usually ends up pretty badly. So right now, what I would see to say, hey, cocoa could break down, continue to move lower, possibly be a great short trade would be if it continues to do this, where it moves up to that, it's at 10,000, then it moves back to, God, these are huge ranges, so 7,700s, then it goes back up. If it keeps carving out that range and then finally breaks down, I'd say that's going to be one hell of a short at some point. So I'd keep paying attention to that. There's a possibility of it moving higher, but once again, commodities tend to top out, and then that could be the end of it. But there's still some, like Kevin mentioned, there's some fundamentals there that could take over. So we just have to pay attention to the price at this point. Looking next is heating oil up 3%. Kevin mentioned that 200-day or 200-week moving average. Is that where we're bouncing off of right now? Back down lower?
So the 200-week moving average has been an area of resistance. So we actually haven't even reclaimed that yet. That's sitting at $2.63 at the moment. I would say the first intermediate area of support would be $2.56.75. 2.5675 would be your immediate area of resistance. That's the 20-week. And then $2.63 would be your 200-week. So we're seeing a nice little bounce, little retracement. We did see stochastics hinging higher. MACD's trying to do its little bull cross here. And once again, it's like it was hitting off of this nice area of support that we had at around $2.28. Nice little bounce back to the upside, but the trend is still downward, right? And so until we can actually break that downward channel line, which is going to literally line up exactly with the 200-week moving average, you still have to be a little bit cautious on it. But I think when you're kind of looking at the data that we saw from the EIA last week, we had some decent draws in the market. Refining rates are still fairly elevated, but we're getting to the next 2 weeks, 3 weeks now, where we should have peak refining rates for the summer, and then we see a drop off, and then this would be the seasonal time where inventories across the board start to drop off. And if that's going to be the case, it'll tighten supplies up. A tightening supply type of market would then also then provide structure from a price standpoint for a lot of these commodities. So it's a decent move. You kind of have this flag pattern kind of taking place right now. But once again, under that 200-week, it's still bearish until we clear that. And once we clear that we might be off to the races. Who knows, right?
Yeah, no, and I completely agree. And the red line on there is the 200-week moving average. So just so everybody knows, not the blue line is the 40-week moving average or the 200-day. So below that moving average and below both of these significant moving averages, I would still say, hey, we need a little bit more momentum behind it to get bullish on this again. And really, once that happens, the whole energy space could also follow. But I think this is what we do as traders. We follow the price, we follow levels. We know that the fundamentals, if we look at the fundamentals and think what they could be, but then the price action also usually leads the way. So we got to pay some attention to that as well. So Sam is on the commodity pro. You're actually our first guest, Sam. So we were talking about it the other day. Hey, you want to come on the show? So I'm excited to have Sam with us. So let's go through a couple of these charts that you bring, Sam, and then
I just threw in the cocoa chart while we were talking about that.
Ooh, nice. Let's get to that.
If you go back to the 1970s, you see
which one was cocoa?
It's at the top of the deck, number
First one. Nice.
You see two moves over 400% in the 1970s, and in between those moves there was about 2 years. So I wouldn't be surprised, like you're saying, to see cocoa chop around here, but I think it goes higher.
Are you looking at it like it's a? So there's two things about it, and one, and I love this conversation, Sam, because Ian and I kind of talked about this the other day, which is when you have if this is actually a super cycle, for example, like if we're gonna really hang that huge name on it, which is kind of ridiculous, but let's go there. If we're gonna call this a super cycle, and we have this huge move, which also matches from the 70s, which I like. What I told on the show the other day with Ian is if we're in a super cycle, the way to really qualify that as a super cycle is to see multiple massive legs, just like that, like in the 70s. In the 70s, if you look at, let's go all the way back, go to the 70s. If you look at any of these things, if you look at the CPI reports, you look at inflation, you look at rates, you look at whatever you want to look at, there's multiple legs, actually 3 legs for just about all of these products across the board. So seeing cocoa here, if it did chop around and went right back up higher, I would absolutely agree with you that, this could be the beginning of a much bigger thing and a lot crazier. But the price all the way up there, the problem for me is that the fundamentals would have to be so insane to get there But once again, like it's not impossible. Like it happened. It's happened before, and it's the reason why I run my trend systems in the first place. Is like I always talk about Kevin, which is like, you'll see me be incredibly bearish on something until I'm bullish on something. And my price action models, or my models in general, are the reason why that will happen. So looking at this, seeing that possibly chop sideways, move up higher, I think that's a cool idea that not a lot of people are thinking right now. So Kevin, do you have any fundamental thesis that could end cocoa up another 400%?
That could send it to the upside.
Yeah.
Well,
in a big way.
Yeah, it's like I said, if they continue to delay forward contracts into next year, you can have the scrambling type of scenario that occurs within the spot market, right? And that's where you kind of get that FOMO feeling to the upside. If I can't place my contracts in now, if I can't place or execute my prices right now to lock in cost, and I'm a producer, I'm a Starbucks, I'm a Dunkin' Donuts, whatever, or if you're a Hershey or what have you, right? Kind of just depends on how you utilize the chocolate here, but that could create this FOMO feeling in the spot market. That can create this domino effect to the upside. What I will say though, can it move up there? Yes. Does the price stability at that level really will it last? I don't think so. There is going to be a point where producers say, okay, this is too much. You're seeing that with gold. Gold reached to the upside, and then guess what? China just stopped buying. And they said, this is just way too much for us. We're going to wait for this thing to kind of come down. Now we're going to start purchasing a lot more silver. Like that's kind of what's happening right now. Can that happen? Maybe. I would also say too, when we have these type of scenarios, especially in commodities, you go through gluts and then you go through shortage cycles. We're in a shortage cycle, and shortage cycles can last for a relatively long time, but they tend to result in gluts in this market, right? And we have this dramatic move to the downside. So this would be a scenario where you would want to have your stop, if you can have a trailing stop on this, or you can continue to move your stops to the upside, or you want to be able to protect yourself from these downside movements. Right now, we do have some, Sam put on some pretty decent areas of former resistance that can turn into support. You want to be able to bounce off those support areas and kind of move to the upside here. But I would say, barring an additional issue when it comes to weather, I feel like a lot of this stuff is really priced in. And I think the extension to the upside would have to be speculative driven, where literally every day we're talking about, man, look how much cocoa is going, and everybody continues buying into these contracts like we saw a month ago or 2 months ago. Can that scenario happen? Maybe. But I don't see anything that's right now on the horizon that says, hey, there can be a sustainable move where this is just the new range for cocoa for now. I think there is a structural issue that could potentially get worse, but I think you're going to need to have it a lot worse in order to kind of create that similar type of spike and to sustain that price level to the upside here. I wouldn't be bearish on it either, though. And if you look at the commitment of traders, you are seeing, long positioning starting to structure back into it. So that's your bull sign right there. But I would just be kind of cautious with it. We got a MACD on the bottom there.
Yeah.
Look at that MACD. I mean, come on. Like, even from a technical standpoint, you got to be like, all right, do you really want to leg into this thing right now? And you might say, yeah, because MACDs, and Sam will tell you, MACDs are really good for range bound markets, right? They suck when you have trend breakouts. They give you false signals all the time. RSI, false signals all the time. CCIs, false signals all the time in trending markets. But you have to also kind of respect the fact that looks like, in my opinion, a blow off top. But I think we experienced a blow off top. Large volume spikes, candles kind of showing dojis towards the end of this particular situation. Producers not really participating. Short interest starting to get back into the market, or you're starting to get short sellers back into the market. That's kind of what we saw. Can we re-engage and try it again? Maybe. I would just say, though, too, when you look at this chart, when we spike highs, do we go and make new highs after the fact in these cycles? And it doesn't appear that we do. And so
no,
I would be cautious with it.
Yeah, no, I like that point because, so think about it this way. There is a bunch of different scenarios, and this is how these major trends work. Buying it today, would I suggest? No. buying it, or shorting it today, would I suggest it? Absolutely not. What I would do is go, if we look back, and if you look at that retracement from the 70s, this is a thing that most people don't really ever look at in commodities. They hear about these massive moves and they're like, wow, I mean, what was cocoa back then? It was 20, $30, to thousands, so, that's an insane move. And they hear about these moves and they go, well, shit, if I just held on to cocoa from, 0 to a million, I'd be a billionaire. And really, what happens is, as a trader, you have to look inside of the market. How big are those pullbacks? That's a 50%. I mean, one of them's more than a 50% retracement, the first one from the 60s into the 70s. And then the next one is at least a 40% retracement. So you could be looking at 60 to 80%. I mean, cocoa having and Bitcoin and all of these things have 80% drawdowns at times in the middle of bull cycles. So like this is the reason why like commodities are incredibly hard to trade. Like you have to have very small positions. You have to be very systematic. So I would say the best scenario that actually works out, I think, for both of you guys is the same thing as we're seeing back then. We see a huge pullback. Kevin talked about that support that Sam drew on the chart. So the big pullback, we had that pullback to support. That's a huge pullback.
Yeah.
That's a massive retracement. So you don't want to be buying it and thinking of more upside here. You just want to wait for that to happen. And then if you get a new buy signal later, great. But let it pull back. And this is why the fundamentals come into play is, as Kevin mentioned, there's a zone where producers are sitting there watching and going, this amount makes sense. This is where I would buy. Here, most of them are kind of, they're getting interested on these pullbacks from time to time, but they're not super interested. When you'd see extreme buying is probably that 4,000 zone. And then you'd go, okay, well, now we're starting to move up. Now I'm seeing a buy signal. Now I might get in again. And I think that makes sense.
Yeah, and just to kind of reiterate, so what do you need? You asked me for a fundamental catalyst, so I do have a couple, right? All right. So this is what we saw the last time. In Europe, they were having difficulty actually obtaining the physical cocoa, right? So there's logistic changes, issues that did occur. And then you also had kind of an issue when it came to like the Red Sea, and it kind of just threw everything in a little bit of a tizzy, if you will. And I hate using that word, but that's exactly kind of what happened. So we had this disconnect when it came to spot prices in the EU and then what we were seeing here, right? And then you have the logistical challenges. If you have a logistical challenge, that could be the case. But the thing is, a lot of those logistical issues have been resolved. And when I say resolved, I don't mean fixed, but I mean the workarounds are now working, right? For now, until those workarounds are no longer working. And then you have to think, okay, are we going to see a huge demand side spike within the EU? Because the EU is actually the biggest consumer when it comes to cocoa as a whole, right? The conglomerate of nations that are a part of it. And so I think that would be your kind of demand story. Flip that around and say, okay, La Nina hasn't come as early as what we expected earlier, right? We were kind of expecting this huge shift from El Nino to La Nina to happen within like April or first or second week of May. That didn't happen, right? But we are expecting it to flip in September. If that were to be the case, that could create drought conditions. Once again, looking at that Ivory Coast type of situation. And then if that is going to be the case, then boom, that could be another driver on the fundamental front here. But outside of those two type of events taking place, I don't see any other, sustainable factors that can take place outside of those two items.
No, I love that. And that's what I love about having Kevin, talking to Kevin about things in general, is like we can kind of come up with what the scenarios could be and how we'd move forward. And that's something for everybody. For me, I'm going to have my models. They're going to be buying or selling. And then Kevin explains, exactly how these scenarios can play out. So what do you got for us next, Sam? Coffee.
Well, talking about commodity super cycles, you see the laggards catch up to the leaders. Like you see copper breaking out to the upside, struggling there now. but you would imagine that things like tin, zinc, aluminum will catch up to copper. And you go to the softs, you see cocoa have this massive move. You'd expect things like coffee to also break out. And you look at the coffee chart going back to the 1970s, and it has an eerily similar base to what cocoa had before it broke out. So I don't hate betting on coffee being the next cocoa. What do you guys think?
Go ahead, Kevin.
That is a tough one for me. So, okay, so we are seeing some issues when it comes to Brazil, right? And it's going to be on both of the main products that are out there, right? So we do have a problem there. But I don't know if it's as aggressive as what we saw with cocoa. And we are so right now, and this is pretty much across all of the grain markets, just in general, or even the softs, right? We don't really know what's happening in South America yet. We don't know the damages that we've seen from the droughts. We don't know the damages that we've seen from the floods. We kind of have an expected range, and it seems like the market believes that what we were expecting was a little bit more aggressive than what the actual outcome will be. Okay, so the long side here, though, is that since we have those weather conditions in Brazil, both hot and wet in some respects, right, depending on where you're looking at, we are seeing harvests right now where we have smaller bean size when it comes to coffee. And if that's going to be the case, then prices have a fundamental case to move to the upside. Smaller bean size means you need more beans, right, to be able to make weight and be able to sell. And if you have smaller bean size, boom, like that's kind of the gist. That is occurring right now in the early harvest for Brazil, and that can drive prices higher. I will say though, with this chart too, we have a cup and handle inside of a cup and handle, right? We have a main cup and handle that's kind of taking place. It's a sloppy one, but let's just call it one, right? That last red arrow to the right there, the one closest to near-term price, where we have like this move to the upside, we kind of failed, and now we consolidated, and now you're going to try to track higher. Now, I see what Sam's saying. KJ, you break out of that resistance zone and it's off to the races for sure. I gotcha. I don't know. Once again, once we get more insight into what's happening in South America, I think that's where you can have a clear fundamental picture to say, okay, this thing can rip to the upside. Now, risk reward right now, based on the fundamentals that we do have, based on that chart pattern that we do have, potential upside risk versus downside, upside moves versus downside risk, I think it favors the upside move. But be mindful of that resistance level that is there. And once again, kind of, you're going to need that fundamental push to the upside, that catalyst move, in order to really bust that thing out. Demand side, it's not there yet. Demand is there, but this is a supply side driven move to the upside rather than demand, just like everybody just wants to drink coffee and just inject it into their brains, into their veins. We don't have that yet, right? This is all supply side driven. Give yourself a demand side driver on consumption, and then that thing's gonna break and that thing's gonna rip higher. We just don't have it yet.
No, so I'd love to agree with Sam. I'm long coffee, so just for me, I'd be like, yeah, you're right, Sam. But at the same time, like, I know better than that. I've been trading for a while. So once again, there's when I initially put on the trade and was talking about it, it had a very similar feel, sure, in a sense to cocoa, but it was like how I described it. It's like a mini cocoa or micro cocoa. Like you could have this move, you could have this breakout, it could move, but moving the way cocoa did, I'd be very surprised. Now, once again, signals go long. I have a wide stop. I'm going to stay in the trade. It doesn't really matter to me. However, at the same time, it's like you have to take certain things into consideration. The cup and handle, this huge base. And my main thought on the commodity cycle, and if you go back and you study all the commodity cycles over time, and our last video with Dimitri and Ian, we went over most of these. And if you go over the commodity cycles and great inflations over time, you see that most of the time the commodities carve out an entirely new range. So, coffee just doing a breakout here, getting to 1,000, chopping around there would be very normal for a commodity cycle. So it's not that it's impossible, but I do think once we get to those old highs, we'll probably see some resistance. We could see it look very similar to copper, where it breaks out, comes back, consolidates, and then maybe makes a move higher. Because most of the time when you have, and I always grade my breakouts. There's a grade A, grade B, grade C. If this just ran up right here and broke out of that 308 zone, that would be a grade C breakout. It's one of the worst breakouts. Most of the time those fail. They don't always fail, but most of the time they fail. And then that would come back, consolidate, maybe bounce off that area right where it's at today, and usually move higher. Now, once again, the reason why I run trend following systems is because I don't know that for sure. I don't know if it's going to do that. I think it's going to do that. It could do that, but will it do that for sure? I have no idea. So with commodities, they can get into, and like Kevin talked about, they can get into these cycles, and they can be extremely like everybody buying, everybody acting crazy, things moving in a crazy move. Because once again, something to think about for all traders, commodities are great trend vehicles because there's not a ton of news around it. So because there's not a ton of news around it, you don't have that same mean reversion, pullback, choppiness that you get in equities. So because of that, you could see this run, but hitting a triple, a quintuple, a 350%, like I'd be surprised, but anything's possible.
For sure. What's the time frame on that chart? Sorry, I'm barely.
It's going back to the 1970s.
Okay, so there is an inverse head and shoulders on there that is also very bullish if you kind of look at it. So, Jason, you kind of got your mouse to the left shoulder. We have that peak or the head right there at the bottom of that semicircle that we got there, and then we're basically forming the right shoulder right at that bottom. So, yeah, and then you have that neckline, which once again is kind of that resistance area that you're looking at. I've never seen, this is me personally, maybe you guys have, I've never seen an inverse head and shoulders on a chart that long dated before. And so watch out, because like that is, technically, if you took the name off this chart right now, and you didn't tell me it was coffee, I would be like, yeah, this thing's base and rip hard. I just know with coffee, I mean, like you got to have that fundamental catalyst, but I have not seen an inverse head and shoulders on that long of a duration before. And for me, I respect those. I respect head and shoulder patterns all the time, especially on weekly charts. I respect inverse head and shoulders. They're a little bit harder to identify and trust, but I mean, it looks like it's winding up. So Sam, I see where you're coming from there. Once again, everything, Jason and I talk about this all the time, right? And I noticed, I got to call you out though, Jason. I hear you saying cycles. I watched that little Ian, I saw your little Ian thing. You said super cycle, bro. I heard
you like the super cycle. You like it. Don't know
why. Yeah, man. You remember Scary Movie. Look, if that were to happen, this could be one of those ones that does rip hard to the upside, right? The softs, in my opinion, are the easiest ones to create cycles and strong trends to the upside or downside because of the fundamental nature that's inherent within those products. And so I get it. I get it. If it were me and somebody said, hey, would you fade or trade? I would say you trade this one to test it. Because at the end of the day, you have an upward trending line there. What's your risk reward? I mean, you could put it at that, once again, that right shoulder that we're kind of talking about, that peak that's there. That pullback's not that aggressive on a holistic basis compared to what you could see to the upside move. And if you do have trading signals or systems that are out there that see that breakout, and even if it just breaks out for, let's say, a 3 days, 4 days, there's going to be systems that say, okay, trigger. Because every system's looking at the same type of setup pattern that is taking place. It's basing formation, inverse head and shoulders formation, significant area of resistance being highlighted. As soon as that breaks, the algos kick. Now, it's probably not as many algos trading coffee, which is kind of a good thing, right? Because that could actually fuel even exaggerate moves. That was what Cocoa had no business being up there, in my opinion. It had no business being up there, but it continued to go because you had speculators getting in. You had people saying, wow, look at this breakout. You had a FOMO feeling, boom, rapid move to the upside. Orange juice, same type of scenario, boom. No one talked about orange juice at all until somebody looked at a chart and said, hey, this thing's ripping and trending hard. Let's trade some OJ, right? And then that's when we saw this catalyst move to the upside, and orange juice just continues to be that expensive, right? So you have those type of moves. I think this is actually a really decent chart setup. One more catalyst, one more fundamental catalyst, demand side, not supply side, in my opinion. Demand side catalyst, watch out. What else we got for charts?
And a lot of these look pretty similar, you know, like a lot of these long-term commodity charts going back to the 70s, like you do see these massive bases. You do see that there's this possibility of this move higher. I mean, if you go down the list, you see a lot of these possibilities. So I think this is a cool chart. I'm happy to be long coffee. We'll see where it ends up. I assume we'll hit that resistance zone. We'll see a little bit of trouble there, but we'll see where that ends up. So lithium up next. So what are you seeing here, Sam?
Well, lithium's been having a hard time since it peaked in late 21. It's come back all the way to its 2018 peak. I'm just curious if this is going to turn into just a massive distribution pattern.
Yeah, for me, it's not. I follow the space in the sense of our ETF systems use it. However, I'm not much of an expert on the space. So, Kevin, do you have anything to add about lithium?
So here's what I would say. So we had a significant spike in demand, right? You see that peak that we saw to the upside. Everybody and their mother wanted lithium. They wanted to be able to mine lithium. Tesla didn't. It was basically begging people, please get this thing under control. We will pay you. We don't want to do it ourselves. Remember, Elon kind of talked about that several different times. But we are seeing a ramp up in operations when it comes to lithium mining. And then also you're seeing a slowdown. Now, I believe that we actually did see a significant amount of double ordering taking place. I feel like this is the same type of cycle that we saw when it came to handheld electronics, as well as consumer desktop computers, laptops, and stuff like that during COVID, right? A lot of double ordering, a lot of demand that was out there. Now we're just seeing a glut in supply. Now, old support or resistance turns into new support for sure. That thing better catch a bid real quick. And unfortunately, the bounces that we are seeing are not wild, aggressive bounces to the upside that would indicate that buyers are truly stepping in for right now. But just know that lithium operations and mining operations on the physical side has really ramped up. And then also it's kind of getting faded a little bit because ICE vehicles and hybrid vehicles are kind of still in vogue at this point. Wild statement here, and I know this is going to kind of get me in a little bit of trouble. Near term, 3 months, fade lithium, buy palladium. Oh, no, check out palladium's up for about 4% right now. Short squeeze taking place. Palladium also utilized in hybrids, also utilized in ICE vehicles. There's a demand story that can be told there, right? If we do see this reignition of China production, especially when it comes to vehicles, palladium would be in demand there. Understand what I'm saying though, very short term, I think there would be more optimism when it comes to ICE and hybrid. And I think that's where you're going to see the palladium and platinum trade rather than lithium at this point. Berkshire Hathaway has just actually created a partnership or a joint venture with Oxy to develop and expand mining operations in California for lithium. So if Buffett loves it, you got to keep your eye on it. But that chart still, for me, maybe a technical near-term bounce, but I don't know. I think it kind of goes down a little bit more. Double ordering. I don't think the demand story is truly there, and I think that is more upside potential with palladium with the short positioning that is taking place. Not a lot of people trade it, but when you do get some eyeballs on that particular contract, it can rip. And I'm looking for the long-term downtrend for palladium still intact. I'm not going to deny that. I'm looking for a short squeeze and the intermediate optimism when it comes to car sales in the East Asia markets. And I think that's where you get those tailwinds for a metal market that is completely oversold and has been neglected.
Dude, that's a lot.
I know. That's ridiculous, right?
That's great, dude. But like it's a lot because I'm thinking about the palladium trade, and I think something's like incredible. Just like cocoa, you mentioned earlier, cocoa had this crazy move, and it really didn't make much sense. And really, like that to me is like why I do what I do, why I create the systems I do, is because most of the time, for me, I happily admit that most of these things don't make a bunch of sense to me. I really don't understand where exactly things need to be bought and sold. And so my systems kind of take advantage of those outliers. That's how we make money. However, when you're looking at something like palladium,
you got a chart of it? Are you able to pull a chart of it by chance?
Yeah, I was trying to look for it for a second. Let me grab that. But when you look at a chart of palladium and you see like that short interest that has built up over the longest period of time. And it's the reason why it's incredibly hard to just, hey, I'm going to just buy palladium because I see extreme commercial buying like that. That's a terrible way to trade. It's just not going to make you any money. But if you do it in a way that's, hey, I see this extremes in commercial buying going all time. I mean, it's all time. If I see these extremes in commercial buying and I also see a trend change on top of it, I'm going to be bullish as hell. And once again, you could do that trend change in a very short-term way, like Kevin's talking about. You see a bounce here. Let's say it crosses, something like a 10 EMA or so. I'm sure it's even over that today. You buy it, you do a short-term trade like that. For me, we look for a 50-day high. You see a 50-day high, the trend could possibly be changing. Take the trade like that. There's a bunch of different ways to do it, but this thing looks pretty amazing.
It's been basing literally all year. Now, when we say that, understand palladium can literally trade 5%, 6% in a session, and that's absolutely nothing.
And it's a huge contract.
Yes. Yeah. So it's nothing for it. And it's a tough one, right? It's a tough one, but if we're talking commodities and I'm saying, okay, this thing's ranged out from, let's say 1,000 down to around 851, but since February, boom. I mean, that's a consolidation. And if you kind of go back on the charts, you can't really say palladium's actually truly consolidated lately. And when it does actually spike for the most part. Now, once again, risk reward. I'm looking at it and saying, yeah, I think there's a net short position that might be a little bit exaggerated. I think that you could have a fundamental catalyst, China stimmies, taking place there. Short term pop. I wouldn't even put 3 months on that. I would literally be like the next week, or not week, but next month, next 4 weeks. I would suspect that we would see a decent little pop. And if you actually got a pop to say 1,300 right now, it's trading at 962. Looking at 1,300. I mean, that's a nice little rip, man. That's a decent little rip. Let it test the 100 week moving average. Let it fade back. And lithium's going to be also hard too, right? Because there's this implied risk right now that's going on with like solar technology, and especially when you're looking at the EU and when you're looking at the UK. Let me just go back. When you're looking at France uncertainty and when you're looking at the UK uncertainty. So I think there's like an implied downside pressure that's being put on some lithium right now. The chart looks good. I mean, but I don't know. I would go for, if you were making an auto play, I wouldn't do an EV play right now. There used to be a hand-in-hand type of move when it came to lithium and Tesla, but Tesla doesn't even care about like their own cars anymore. They want robo taxis and they want robots walking on the street these days. So that, I think that disconnects when it comes to the correlation. What do you think, Sam?
I like the palladium. I like the monthly MACD for long-term trends, and the monthly MACD has been down since August 21, which was a pretty good out. And you're on the verge of getting that upside cross. So I think the trend could be reversing higher here over longer time frames, longer than 3 months. But
yeah, highest volume that we've seen over the last like month and a half that we've seen in that contract for over 3 years.
yeah,
Got
I
to
think
say
there's something
something.
going on there. This wheat chart really stood out to me. Wheat has just been slaughtered. Had 10 straight down days. First time it's done that since the early 1990s. What do you guys think about that? Is wheat done, or is it?
So I think there's
pace?
there's a million ways to look at the weed story, and that's kind of the hardest part about it. One is you could look at it in a way where globally it makes a lot of sense for wheat to go a lot higher, and then also you could look at it on a micro sense and say there's some areas where there's a lot of weakness. I personally still think that wheat has more upside than downside. I would be very surprised if we get under that 500 level once again. I think that in the long run, you'd want to still bet on wheat higher. However, do not come in when things are crashing. I think too many people as traders, the biggest problem I think people have as traders is that they continue to think of things like discounts. I'm going to get into this thing; it's on a discount. Like we're still long corn. Wheat got stopped out recently. These things do have more upside, but once again, there's a lot of struggles in the short term. So if you read my last letter from last Wednesday's report. Last Wednesday's report, I basically talk about, and I've been talking about the fact that probably the end of June, middle of summer, some point, this is when we're going to see these things run. There's a lot of catalysts out there. There's a lot of crops that are damaged right now, especially in the Midwest. We're having a massive heat wave, but these things aren't going to just show up all of a sudden. It's going to take some time. It's the same as like you have a lot of catalysts for natural gas as well, but it might take some time. So I think the grain train in general has a lot more upside to go. I would be very interested to see where this ends up and what Kevin's got, because Kevin's got some good stuff on wheat as well. But I'll also put a link to that report in the chat.
All right. So we got a weekly. Can we bring a weekly up by chance? Because the dynamics are definitely. I am just a pain in the butt today, right? All right. So
you're
look.
Good.
So here's wheat, and here's the reason why I want to kind of show a timeline and really wanted to highlight the last 4 weeks, as Sam was kind of talking about, a pretty aggressive sellout to the downside here. And here's the reason why that we've seen this, and unfortunately, dark clouds hanging over wheat. We had the technical resistance level at the 200-week moving average, literally hit that to the T, bounced back to the downside here. What also happened on May 30th, though? Monsoon season for India occurred. There was a scenario where we were a little bit concerned. The market was a little bit concerned about India. India, grows its own wheat crop, and then for the most part, actually consumes all of its wheat crop. It doesn't export any of it for the most part, right? So their concern was like, hey, they're in a significant drought. They might not be able to grow wheat. And if that is going to be the case, then they would have to go to the global markets in order to find that supply. May 30th is when their monsoon season started, and it came down with a vengeance. It was over 106% of the 50-year long period moving average when it came to the amount of precipitation, really filling up those reservoirs, really filling up those fields, the aquifers being filled up. So that abated the India risk. That was the first risk. The second risk that we had out there was the Black Sea. Black Sea, Russia, and even when you're looking at Ukraine, had some weather issues, also some logistical issues. Both of those, let me say not Ukraine, but for Russia, weather issues for the most part abated. When did that abate? First week of June. So that's another negative catalyst. USDA comes out, they say, hey, wheat production for the most part is actually going to be a little bit better potentially than what we expected. And weather events have been a little bit of a headwind, but we're not too concerned about it. Boom. Another move to the downside. So technical resistance 200 week. India monsoon season coming in. taking out the risk for it, because the India's situation was going to be a bad one. If they had to go to the global markets, we would have been completely offsides. Black Sea issue, not a problem anymore. Weather-related items, when you're looking at the United States, drought conditions, for the most part, we don't have any that are really, really concerning. In fact, we kind of see this reversal in Iowa, which is not really a big wheat producer, but in Iowa, we had this drought turning into now they have too much water, which is kind of why you're seeing a little bit of a bid when it came to corn. But I feel the fundamental story has shifted since Jason and I kind of last talked about wheat, where all of those catalysts beforehand were the prime reason why we saw that spike move to the upside. It lost those fundamental catalysts. Well, weather can change on a dime, and it is coming to an area of support sitting at what, 560-ish, 560-ish down to 530. You'd like to see some buyers kind of stepping in there. MACD doesn't look too great. Our side doesn't look too great. So I think this is more of a fundamental reason. Yeah, there's some technicals there. It would have been nice to see that breakout on that 200 week though, because that would have opened up a whole can of worms for an upside breakout, maybe even up to 1,000. I just don't. The fundamental case is not there. Testing the area of support. I think Jason, you're right though. Seeing that support gap area kind of gives you a sense that we might see some buyers stepping in, and then we have that channel line. Previously resistance, could that turn into support and bounce off of it? That could be the case.
Sorry, I was on mute. But no, I completely agree, and I think that that grains are always kind of a tough trade. I mean, look at those charts. There's tons of chop. It goes back and forth. The trends also, like, it's the same as like natural gas. I always say the way to trade natural gas is to have an incredibly wide stop and an incredibly small position. Because if you want to ride those trends, like, you're gonna either, if you're just hanging on to those things, you're gonna want to shoot yourself half the time. I mean, it moves up, it moves down, it moves sideways. You're just frustrated all the time, especially if you have a huge position. But if you have a small position, you can go, okay, well, I'm just gonna sit in here and see where it goes. And this is something that could go up, a few 100% here and there. Like, it happens all the time in wheat. So once again, we saw that huge blow off top that happened in 2022. And so we'll kind of see where that ends up. But another great chart from Sam. So let's move on to feeder cattle. So Kevin brought up a good chart the other day about weights. For me, feeder cattle, and I like the diamond pattern. How old are you, Sam? You're too young to have a diamond pattern.
I'm 21, so
21. So Sam's
I've read
only
a lot of
21. He has a diamond pattern. I have more respect for Sam today. But when you're looking at these like diamond pattern setups, this could be a top. This could be a consolidation to a move higher. So we just need to see where this ends up. But what are you seeing on here, Sam?
Yeah, just kind of the inverse of grains. If grains are bottoming out here, maybe cattle are carving out a potential top. You're seeing this diamond top forming, and then you have a pretty significant RSI divergence, potentially suggesting there's some downside in the feeder cattle market. What do you think, Kevin?
I'm there with you in a sense. I just find it very tough from a seasonal standpoint. And Jason said, like, dude, yes, there's seasonals, but like, don't base your whole thing on. I gotta base my whole thing on this. Seasonally, it seems like feeder's going to be in demand right now, right? We have some issues when it comes to the bird flu situation, which, I mean, people said they were dropping weights, and things ain't dropping weight, gaining weight at this point. It might be, I don't know what's happening when it comes to cattle weights in general, but we're seeing a nice little trend to the upside. And Jason, I'll send you that chart too if you want to bring it up. But you kind of have that wedge pattern taking place. I'm right there with you. Maybe we are seeing a little bit of a stalling out. And if we do see a break, it would be a measurable break to the downside there. And then also you have, a little bit of divergences taking place here. But when you're looking at the physical market, knowing that weights are as high as they are right now, and I'll send those over, knowing that weights are as high as they are right now, and then also slaughter production kind of actually hitting its seasonal lows. I feel like there's still some price support through July. And then I think once we get to the SEPs and the D contracts, I feel like we might have a rude awakening when it comes to cattle in general, whether it's feeder or whether it's live cattle, right? So when we talk about feeder cattle, we're talking about the smaller cattle that you are raising up. And we're talking about live cattle contracts. Those are ones that are eligible to go to slaughter, or if you can utilize them for dairy, depending on, I won't go into that whole thing, but I feel like the demand story right now in the summer season still says prices are supported at these particular levels. I don't think that we see a breakout to the upside unless we have some fundamental event that takes place. I don't see that on the horizon, but I also am just kind of thinking about it. Our dressed weights right now are really high and prices are staying elevated across the board for live cattle. And I think that we are seeing a backfill or a little bit of concern when it comes to ranchers, when it comes to the cattle that they're bringing to market right now, and their demand for backfilling that in the future still seems a little bit high on a relative basis. I mean, anecdotally, I've heard guys that have gone to the auctions and they're killing it on the feeder cattle side, right? Where they're making a boatload of money selling these calves, basically. And so I'm with you. I just think we just need more time. I just think the summer months, or a break in the summer months, I think might be a little bit of a tall order, but it doesn't take much once you get to August, September for that thing to break.
That makes sense to me.
For me, we're still long feeders. I always try to say my position just so people know my bias. Oops, wrong card. So my bias. I have a bias to the upside here, but at the same time, I think there's a lot of things that move this thing higher. Also, like Kevin said, I like to look at news flow. And when I'm looking at news flow and going, okay, well, all the fundamentals should make this go lower. Yes, there's some catalysts to make it go higher, but the fundamentals could make it move lower here. And then the price stays stabilized and is basically sitting right around the highs, consolidating. I would say that could lead to another move higher. It's hard to say because, once again, it's like the grain trade and the cattle trade are always very inverse from one another. So thinking that there's a possibility for both of them to go higher isn't something that I usually do. So one of these things are going to probably outweigh the other one. However, if I'm long feeders and feeders are in a massive uptrend, and I'm also looking at something like corn or feed or any of these things, and they're trying to move higher, I'm not just going to go, hey, this one's all the way down here, this one's up here, I better get rid of my positions. I'm going to continue to think feeders could go higher, the systems are still long, and then I'm going to take the signals as they come in the other areas. Like Kevin said, there's some good months right now for seasonality. Basically, last month, I think it was a 78% probability of a move higher in feeders. This month, it's like 68%. So you have this good seasonal backdrop on top of we're consolidating right under the highs. Like, there's a possibility of this moving higher. Yes, divergence is there. However, like I never have an RSI on my chart. I never even look at divergence for myself. I'm not saying it's a stupid thing to look at, just for me, what I do. Because as a trend follower, I can't look at divergence. As a trend follower, divergence is going to trick me 90% of the time, because when things consolidate, RSI is built off price. All these indicators are built off price. So as the momentum wanes off, it makes perfect sense that the RSI is going to be in a downtrend. But once again, just like volume, you want to pay attention to this. Just like RSI, you want to pay attention to this. The best breakouts are going to happen when those start to break those old highs before everything else. So I would watch the RSI here for a break above 70. That could be a catalyst for saying, hey, we're going to move higher here. I would watch, open interest, see what happens with the open interest and so on. So all these things could lead to cattle prices moving a little bit higher. But it's not a bad idea to sit on your hands until you get that breakout. So Kevin, we got to end soon, and Kevin brought a couple charts. I want to actually bring up your one on weights real fast before we get to the silver chart. If I can get over there, make a screenshot. Still feel like I should have these. I feel like I was kept looking through my stuff to go low, and I know I have these, Kevin, but I think I deleted them.
It's all good.
Had to make space lately.
All good. All good. Well, so basically, here's what the charts are saying. When you're looking at weekly dressed cattle weights, we brought this up a couple of weeks ago. Just this massive divergence where weights are getting higher and larger, and it's diverging completely from what we've seen for the 4-year average, 5-year average, as well as what we saw from last year, which is an anomaly to say the least. Now, you would think, kind of going back to the price action, especially when you're looking at live cattle, or even feeder for that matter. Rich, feeder and live cattle can disconnect in prices. Like, we always have to kind of keep that in mind, right? But traditionally, if you had higher dressed weights, everything else staying equal, you would have a downward pressure when it comes to price. That just hasn't really been the true case. We did see a pullback, but we saw somewhat of a seasonal pullback. But now we're starting to see those weights kind of move back to the downside here. And they're moving to the downside when we traditionally would see weights actually moving to the upside, right? So what are we going to see here? Are we going to see cattle weights, dressed weights going up to 900? Are we going to see just a complete bucking of the trend in the latter half of this year? Those weights are starting to come back down. Is that going to be the case? That actually could be, for the most part, supportive for price. So that's one of these situations where price action says, hey, we're nearing an apex when it comes to cattle. This is in general. But you look at the underlying fundamentals and you say, well, the price should have already corrected significantly, and it hasn't. And knowing that, somebody's pricing in something. You don't want to kind of fade that move. So I feel like prices right now are kind of appropriately at the right levels until we see a break in trend. Either production for cattle and slaughter just rips to the upside, right? Bringing more supply to the market. Now, when you're looking at the slaughter numbers, it's kind of an inverse relationship. As slaughter numbers go up, the market perceives that to be bullish, right? Because the more that you're slaughtering the meat. This is kind of like a very graphic, like, but the more that you are slaughtering cattle, the thought is physical demand's going up, but there also can be an inverse relationship where you have maybe too much, and then you have, freezer inventories, moving to the upside and breaking trends. I don't know. I feel like this remains until something dramatically changes, and I just don't see that actually occurring at this point.
No, good points. And so we'll end on this because I know there's a lot of fans of the precious metals on here. So, Kevin, what are you seeing here on this chart? World silver market balance. What do you look at?
Oh man. All right. So silver, we know that we had this little flag pattern we pulled back here. This is from the Hightower report, really good service. I would recommend people kind of check it out. The Hightower report is basically saying right now we are at a significant deficit when it comes to silver. And if we actually saw a spike in exchange traded product investments and they spike to the upside, we could have one of the biggest draws, or basically one of the biggest deficits that we could have in silver in, I believe, 15 years or 20 years. So they're making the fundamental case that the ETF flows really haven't really matched up with what we've seen in the demand market. And if we kind of see this new rush going back into, let's say, the SLV or some of the other ETFs or ETPs that are out there, that could create a scenario where it does tighten global supply significantly, and silver could rip to the upside. And they are looking at it as $29 being the area of support right now. I kind of diverged from this a little bit. I'm under the impression, and I still kind of believe this for right now, that I think the physical demand side of the equation, and when we're looking at these deficits, I feel they're a little bit more over exaggerated than what we are actually seeing when it comes to the physical markets and what we can spin up. But there's a cohort of individuals out there that say, hey, we are seeing a complete disconnect of prices. Silver's undervalued compared to what we could have as far as the deficit for this year in 2024. And so that's kind of what they're showing. They're just showing that forecast, and that we could have a similar situation that we saw during COVID, where people were hoarding. You got the election season coming up. Maybe we do see a rebound when it comes to electronics. And that's kind of what I wanted to highlight there. Biggest thesis there from the Hightower report is the fact that They believe that retail flows are undervalued right now, and they believe that if we do see a significant spike up, that could actually put a price floor in for silver. For me, I'm still thinking this price area right now kind of ranges out. At first, a couple of months ago, you guys can go back, I thought that we could actually retest the 25.50 level on silver. That just hasn't been the case. We continue to trend higher. We found an area of value at 29. Is that going to sustain? And if that does sustain, then you look at 33, 34 for an area of resistance to the upside here. Let's see. And if that's going to be the case, this is your super cycle product, in my opinion. This is the super cycle one. Higher beta than gold, industrial production, industrial applications, precious metal applications, central banks buy it. If you're going to have this kind of like bounce off this 29, and Sam can kind of talk about maybe the technicals here, and it does want to rip higher, I think this could actually have a second win.
No, I agree, and I really do. Silver to me has so many different pieces to it. It's a very like you mentioned earlier, you know, the monetary value of silver is also another thing, and we have to always keep in mind of that. I just look at this chart and I see that there's more upside to go. Like there's the possibility of more upside here. It's a very bullish setup. We're not moving too quickly. It doesn't look like a cocoa or even a copper where it's just breaking out and it's going to pull back hard at some point. It's just moving nicely. Like, and when you see something that's a chart that's moving this nicely, it's great. And I'll give you a quick story about, I went to the gold store the other day. I have a couple buddies who work in that industry. So talking to them, they've been talking about the fact that, yeah, I was like, so how is it looking there, you know, with gold and silver hitting new highs and so on. Not new highs for silver per se, but new, at least 10-year highs. And they basically were like, there's no buyers. Like there's nobody that's you know, that people aren't coming in some frenzy, acting crazy. People aren't selling like crazy. Nothing like we've seen in the past. And normally what we usually see in, like, you know, I was around, I was a gold and silver buyer back in the early 2010s. And so if you went to a gold store around that time, everybody was there. It was a panic. It was a frenzy. They couldn't hold on to gold. They couldn't get enough gold. I mean, it was a mess, and it would change day after day. At this point, it just doesn't seem like, you know, there's a catalyst for a top. It doesn't seem like people are that interested yet in it, but also they're more interested in hoarding it. Because to me, the numbers that are the most concerning, why I think there's more upside, is that people aren't selling it. People do not want to get rid of it, which tells me that they're not willing to get rid of it. Just like Kevin mentioned earlier about prices being too low, they're still not willing to get rid of it here. They want to see it go even higher. They'll probably be looking for those old highs around $50 on silver, that's a huge move.
Yeah.
So I think that's very possible. I don't think that's a huge thing to throw out there that silver can hit $50. So Sam, do you want to end it on anything about silver?
Yeah, just I have data going back to 1992 with silver, and on average, July tends to be the best month. So as long as we're above 28.50, I think the bias is higher. I like it.
Nice. No, that's good, because to me, like, it's if you're a trader and you take everything and you go, okay, like, well, what's our real job as traders? Like, not as analysts, but as a trader, it's probabilities. And that's what we do here, and I hope that's the value other people see in this, is like, we take the fundamentals, we take the technicals, we take the seasonals, we take the positioning, we put that all together and go, this is the highest probability move. And I think silver's a good, like, a really good look at what we do here and how you guys can take advantage of it as well. So, all right, guys, thank you, Sam, for coming on, our first guest for me and Kevin. Kevin, as always, awesome to hang out with you, man. Lots of fun stuff we talked about today, and we could talk about the super cycle going forward forever and ever.
Yeah, I think we're gonna, man, if we have some time later this week, I think we get back on and maybe talk about that, right?
Yeah.
And it'll be one of those conversations where like we can bring a couple of charts, and I think there's some validity to the super cycle notion. I just think we need the catalysts that we have right now. I don't think are the full ingredients yet, right? But there could be some things on the horizon. So I appreciate you both, Sam. Appreciate you having you on and providing those charts, man. Come back anytime. Love seeing some really good technical work come from you. So
thanks, Kevin. This was a lot of fun. Thank you for having me.
And we'll come on maybe Friday. Kevin can come back and we'll kind of go through the super cycle stuff and we'll see where we go from there. All right, guys. Thanks for hanging out with us. We'll see you soon. We're on every week on Monday at 11 a.m. Eastern time.